Let's jump into it. So AOF is proud to support entrepreneurs through access to capital and educational opportunities like this webinar. And we are very, very grateful to our partners at Found LA for sharing our commitment to small businesses. I'd love to turn it over to Marsha Olson to share a bit more about how Found LA continuously supports small business owners.
Thanks, Brittany. Hi, everybody. I'm Marsha. I am the director of Found LA. If you haven't heard of us yet, we are a nonprofit organization based in Los Angeles that is all about supporting local entrepreneurs and business owners, much like all of you here. We want to make sure that entrepreneurs have access to capital, that they have access to education, so that once they have the capital, they know what they want to do with it. They're feeling confident about their next steps. And we want to make sure that we're bringing entrepreneurs in community with other people, because we know that you all are often very isolated working in your businesses, trying to keep it going. And we want to bring you into a community of other people who are in the same boat. So to that end, we do partnerships like the one that we're doing today with Accion Opportunity Fund. We're so excited for you to learn a little bit about how to get your business tax ready. This is something that we hear about all the time, is that folks want to know what the next steps are so they feel really confident in getting all of their finances taken care of for the year. So really happy to have you all here. I will drop my name, my email, and our website into the chat. If you ever need any of those other things we talked about, capital, education, we are here for you, and we would love to see you at future events, whether virtual or in person. So thanks so much, Brittany.
Thank you, Marsha. It's so great to have you here and to share more about Found LA and how they support small businesses. So, and yes, everyone keep an eye out in the chat. As Marsha said, she's going to drop some resources there. So let's start our conversation about taxes. And I am so excited to introduce our two amazing experts today. So first, I'm excited to introduce Luis Ramos. Luis is our Director of Business Advising at AOF. Oh, sorry. And he has over 10 years of experience mentoring entrepreneurs, building teams, and creating processes needed to launch successful businesses. He's advised more than 1,000 businesses from idea to reaching their goals in both Spanish and English. Hi, Luis.
Hey, Brittany, how are you doing? And hello to all of our attendees as well. Hope you're ready for taxes.
Who can't, we're all ready for taxes, right? Thank you, Luis. Great to have you here. All right, and next we have Oren Shani. So Oren is our credit advisor and certified business coach with AOF. And Oren also has over 10 years of experience managing businesses and advising business owners. He started, managed, and expanded his own business, providing disability accommodations for live events across the country. He now helps entrepreneurs launch and grow their businesses. Hey, Oren.
Hello, hello. Thanks for having me.
Absolutely. It's great to have you here. Okay, so Luis and Oren are going to take us through our agenda today. So just to cover really quickly what this is going to look like. We are going to have our tax season essentials. So Luis and Oren are going to go over their personal, here are the essential tips for getting your business tax season ready. And then, as I mentioned, we are going to be doing a live poll with you. So we want to hear from you. What kind of frequently asked questions do you often would be most impactful for your business? So you will get that live poll and we will discuss those questions here. And then finally, we're going to go through our live question and answer. Now, I did want to mention, while we are so excited to share this impactful information on taxes, this webinar is informational and does not constitute official legal, accounting, or tax professional services. So we really strongly suggest chatting with your tax professional or accounting services about your specific business needs. So with all of that said, I'm really excited to turn it over to Oren to kick us off with some tax tips.
Thank you, Brittany. Let's get started. So I would say my first and most important tax tip for all you business owners out there as we get closer to tax time is get organized. And there are multiple reasons for this. So first of all, when we say get organized, we're talking about things like keeping your personal expenses separate from your business expenses, having some reliable bookkeeping system that tracks all your revenue and all your expenses, ideally something more than just an Excel spreadsheet where you're not just manually inputting all these transactions, something that's a little bit more automated, something that can increase your reporting capacity. So you're able to just pull a financial statement that you can rely on and you can assume is accurate and updated. So really, really important you spend the time to get organized. And really this should be year round, but certainly during tax time. And mainly for yourself, because you as the business owner, you need to continue monitoring the health of your business. You need to be able to make financial decisions about your business. And the more organized you are with your bookkeeping and your accounting and your financial reporting, the more equipped you are essentially to make those high level decisions that are going to impact the business. Also really important because I'm sure many of you are going to be hiring a tax professional or a CPA. And I would say it's really good to be organized in that sense because you're giving them everything that they need so that they can just get your taxes done. I see a lot of businesses that basically just throw all these receipts at a tax professional and throw all these messy numbers, and they're spending the time to organize everything and clean up your numbers. And essentially you're paying for that. Most of these CPAs will bill by the hour. So if you can provide them with clean, organized financials, you're essentially going to save yourself some money and save yourself some time so that the CPA can just get their work done and be done with it. So that's my number one tax tip that I think is the most important. Also, it's really important to know all the important tax deadlines. And this may seem overwhelming, but you just have to go on and see, okay, what type of business do I have? Do I have an LLC? Do I have a C Corp? Do I have a sole proprietorship? And just look up the respective tax deadline for that. They are different, so it's just important to go and do a quick search on the IRS or just on Google and say, when are tax returns due for LLCs, or when are tax returns due for sole proprietorships. So it's just important that you know that, because if you don't make these deadlines, you'll most likely have to pay some late payments, pay interest on those late payments, and you just want to avoid that. And then lastly, if you are outsourcing, meaning you're not doing your tax return internally and you're hiring a CPA or a tax professional, know what you need. I've come across a lot of clients that I have found to be spending a lot of money on CPAs for services that they didn't necessarily need. So it's important to think about what you need as a business as you're kind of hunting for CPAs or tax professionals. If you have a lot of different entities, a lot of different LLCs, let's say, that are tied together, maybe your business owns some real estate, or maybe your business owns, money market accounts, things like that. You'll probably need a couple more bells and whistles when you're bringing on a CPA. But if we're just talking about one LLC, maybe it's a single member LLC or a sole proprietorship that doesn't have a lot of these different kind of complications associated with them, then you're really kind of looking at a more straightforward process. And from my experience, you shouldn't really be paying more than $600 to $1,000 if you're hiring a CPA to do your business tax returns. So just know what you need, because there's a lot of companies out there that like to upsell you. There's CPA firms, and tax professionals are no exception to that. So the more you know what your business needs, the more you can kind of direct these professional services in a way that's really catered to what you need, and not just all these extra things that you're going to be paying for that you don't necessarily need. So those are my biggest tax tips. I have a lot more, but these are my top three for sure.
No, I love that. Definitely just hearing about, kind of being really organized, especially when, they are charging by the hour. And I'd love to kick it over to Luis and hear about your expert tax tips.
Absolutely. And you know what? I'm going to piggyback off of Oren as well, and I'm doubling down. Honestly, please be organized. some of the stuff that I've seen some of my clients do over the course of 10 years is pretty wild. I had a client once that took, I'm not even joking, a trash bag full of receipts to their CPA. So some people run their business very interestingly, I'll say that much, right? So one of the biggest things as well is like, I think out of everything here, you have to be organized, right? Because at the end of the day, your numbers have to be right. Because if your numbers aren't right and the IRS figures out that your numbers aren't right, you can run into a lot of problems, right? Whether it could be fees, the rare, no, not even rare, because it does happen quite often, is filing inappropriately in a way where the IRS can see that maybe you're committing fraud or like other things that might not be the greatest things in the world, right? So make sure that you're completely organized, right? That which leads to my second bullet point here as well, is save your business receipts as well. Come tax time, whoever you're working with is going to want to make sure that everything that you're accounting for and everything that you're declaring or filing is nice and tidy, and that you have a proof that expense happened, right? And especially in today's day and age, there are so many different types of technology that exist. There are apps that exist that can help you save receipts fairly easily, right? So you don't necessarily need to have the paper copy anymore, because there's technology that exists for that now. So it's take a picture of a receipt and you're good, right? And you can file it away and tag it with a certain date, a certain type of expense. So save your business receipts, right? Because it's only gonna help you if the IRS comes knocking and says, hey, this expense, what is this? Did this happen? And then you can say, oh, right here, right? And it'll make it so much easier. And then finally, and I think this is a big tip for anyone that is looking to access capital as well, right? Is so in this world, it's a really funny example, is that magic is real, right? And the only magicians that I have met are accountants or tax professionals, right? I've met some accountants that make magic happen with the way that they file someone's taxes, right? In both a good or a bad way, depending on who you work with, right? So as you're working with your CPA, your bookkeeper, your tax professional, or if you're doing it yourself as well, know that there are different ways to file your taxes as well, right? And typically for a small business owner, there's really just two ways, right? Either you're filing for growth or you're filing to save, right? Most business owners tend to file to save, right? Just because at the end of the day, you're trying to save money. Hey, you know what, Uncle Sam, I don't want to give you as much as you think you want, right? So oftentimes you'll see that small business owners will depreciate as much as possible, or, you know, the magician will come in and say, wow, you actually didn't make any money this year, right? So, and I've seen that quite a bit, right? So especially if you're trying to access capital, or if you're fairly early on in your business, right? Just know that whatever you declare as your net profit, bottom line net profit on your taxes is going to be very significant into any potential lending decision in the future, right? So if you go to a lender, you go to Wells Fargo, you go to your Bank of America's, right? And you say, hey, here are my taxes, right? I sold $1 million in product last year, right? And then you show them your taxes, and then that banker will look at them and they'll say, well, I see that you sold $1 million, but I see that you actually made negative $10,000. So what's that all about, right? And I've seen it happen. As soon as that lender sees that, they're going to say, this business is losing money. Why would I lend to you, right? So just know there are different ways to file taxes. And if you're looking to grow, you're going to have to pay some taxes, but at the end of the day, it'll help you grow because you'll be able to access capital as well. So just a little helpful tip.
Really great tips, especially learning that there's different ways that you can prepare your taxes. So moving forward, love to talk about taxes by entity type. And everyone, just an FYI, if you're looking at this, no worries, like this will be sent directly to you in the follow-up email tomorrow. So don't feel like you have to take it all in right now, but I'll turn it over to you, Louis.
Yeah. With this, I'm not going to go over this whole chart because it's a lot of information, right? But basically, what you really want to pull from this information is really kind of where do you currently stand in this, right? From a tax perspective, and depending on the type of entity that you select, two things will happen. either you're filing your taxes as a pass-through entity or you're not doing that, right? So a pass-through entity essentially just means that you're passing those profits over to your personal taxes, or your personal tax return in this case as well. So oftentimes that means that you're filing your 1040 personal taxes, and you have a special form called a Schedule C that basically just tells you, hey, on my personal taxes, there's this one page that tells me that tells the IRS, this is the money that I made from my business, right? So the only thing that you have to know from this is that if you do have a pass-through entity, like a sole proprietorship, a partnership, some types of LLCs will also fall into this as well. Just know that whenever you're filing your taxes, it is on the personal side, and the money that you're making is going to essentially be taxed on a personal rate, right? So you're essentially getting taxed that way, right? If you have an entity where you're filing a separate tax return, like an 1120, 1120S, that means that you're filing your taxes completely separately from your business, or from yourself personally, right? So with those types of entities, there's a little bit more complexity with that. So if you have that type of entity, I highly encourage that you work with the tax professional, have a CPA, just because how you pass through or how you get taxed on the business. Sometimes you can also get taxed on the personal side as well on those same profits or whatever you pass through to you. So there's a little bit more complexity, but if you are a small business owner, most often you tend to fall in either the sole prop partnership or LLC side. So you're probably dealing with pass through tax filings as well. So yeah, nothing too crazy, but yeah, I would say just we'll share this with you guys as well, so you guys have more information. But yeah. So there are 4 different types of business taxes that you will encounter as a small business owner. The most common one that you'll see is income taxes, right? It is getting taxed on the profit that your business made at the end of the year, right? It's kind of like what I was mentioning as far as the magician, right? So your tax accountant can make that income disappear, right? And you can say, woohoo, I didn't pay any taxes this year. Amazing, right? And it could lead to bad things in the future, right? Depending on how you file it. But some people are magicians, right? With income taxes, you're just paying taxes on the money that your business essentially made at the end of your calendar year or fiscal year, right? Next up, we also have employment taxes as well. Employment taxes only apply if you have a W-2 employee, right? So anyone that works for you that is a W-2 employee, or even in some cases, some business owners choose to be an employee for their own business as well, and they'll make themselves a W-2 employee of their own business, even if they're the only person, right? You would also have to pay employment taxes as well. So employment taxes, usually you're paying into federal programs, right? Social Security, Medicare, employment protections, all these other things as well, right? And it is a combination of an employer and the employee paying a certain portion of those taxes as well, right? That's why they usually say that it's usually more expensive to have an employee, just because you have to pay half of those taxes, which is about 7.65% on the business owner side, and then the employee pays the other half as well. And it amounts to being about 15%. And Oren will talk about self-employment taxes, right? And that'll go into, a lot of people choose to go with the self-employment or have contractors, just because that contractor pays that whole 15% rather than the business owner splitting that with the employee, right? That's why it's a little bit more expensive, but that leads into misclassification. That's a whole other topic. I'm not gonna cover that right now. But Oren, I'll hand it off to you.
Sure. Yeah. So self-employment taxes really refer to individuals that are not W-2 employees, meaning don't take the form of a traditional employee relationship with an employer. So with self-employment taxes, this typically applies to independent contractors who, independent contractors typically, the way that they are defined is individuals that run their own business. They have their own organization. Therefore they have self-employment tax. You'll typically see self-employment taxes for sole proprietors and also single-member LLCs. Single-member LLCs generally get taxed the same way as sole proprietors. So self-employment tax is essentially just the government's way of making sure that you, as a self-employed individual, are paying your taxes because you're not a W-2 employee. So currently, the self-employment tax rate is 15.3%. It includes Social Security and Medicare. So if you are self-employed, if you're an independent contractor anywhere, these are the you'll be looking at the self-employment tax. And then excise taxes are kind of their own can of worms in and of themselves. Excise taxes are taxes that are applied based on the goods or services that you provide, and these will vary by industry. These will vary by there might be federal excise taxes, there might be state excise taxes, and it could even go down to the municipal level. You could have excise taxes that are required by your city or by your county. So a little bit of research to do there, but excise tax, you may have excise taxes, you may not have excise taxes. Again, it really just depends on what are the goods and services you provide, what industry you're in, and also just where you are located, where your business is based out of. I'm in Washington State, and I can tell you that Washington State has their own excise tax. They call it the business and occupancy tax. Not very friendly to business owners because that tax is based on the revenue you generate from your business, not your profit. So let's say that you lost money one month, you would still have to pay that excise tax on the revenue you receive, not even though you lost money, which is not something that we're super into out here in Washington State, but that's just one example. So really important that you do the research, look up any excise taxes that you may be required to pay on a federal, state, and a municipal level, just to make sure that you're compliant on all those bases there. And then, yeah, record keeping, this kind of goes back to Luis and my tax tips, just in terms of staying organized. Record keeping is crucial. The value of record keeping is huge. It could truly make or break a business. I have seen businesses shut down because they were not monitoring their cash flows, or they're not monitoring their own business situation, that they found themselves completely out of money and not able to pay the bills, and they had to shut down. So record keeping, it might seem like a very insignificant kind of mundane thing, but it really isn't. The more organized you can be, the more successful you can be, and the better equipped you can be to fine tune your business and make adjustments where needed. So good records increase the likelihood of business success. That is 100% true. So really make sure that you're thinking about that you're putting a system in place. It doesn't have to be this elaborate, organizational system. It could be very simple. There's a lot of tech out there. There's a lot of software out there that makes it super easy and super simple, but you just got to get organized, especially when it comes down to tax time.
Okay, so I feel like, when we talk about taxes, there's about a million different ways we can go. We can see you guys in the Q&A coming through. Please continue to ask your questions in the Q&A option at the bottom of your screen. But right now, we would love to kind of take this conversation and direct it at what is going to be most impactful for those of y'all who are live today. So I'm going to launch a poll. So you will get a pop-up on your screen. And this is going to ask you, out of these options, what two do you feel like would be best for you and for your business? So I see you guys taking it. So we're going to give everyone just a few minutes to go ahead and weigh in. And we're going to cover the top 2 or 3, depending on how much time we have. And don't worry if your question, isn't the top question, because I promise you we have a slide for every single question. And I have a really great option for those of you who might want a more one-on-one experience at the end of this to talk to someone about your specific needs. So I'm seeing a lot of folks are taking the poll. Thank you all. Let me give everyone just a little bit longer. All right. Okay, wonderful. All right, thank you all for taking the opportunity to answer that poll. And I'm gonna go ahead and end the poll and share the results. So you can all see kind of which ones were the top top picks. But like I mentioned, don't worry if yours wasn't on here because we're going to cover them all. So I'm going to go ahead and we're going to start off with tax FAQs. So how does my accounting method impact my taxes? So Oren, maybe we can start with you and
Sure. So when we talk about accounting methods, we're talking about two different methods, the cash method and the accrual method. And basically, and I'll give you an example, but basically what that means is if you're using a cash method, you're following cash. You're recognizing transactions the moment that cash comes in to the bank account or the moment that cash leaves the bank account. Very kind of a much more simple process. Most sole proprietors and kind of simpler LLCs kind of follow this method because it just makes sense and it's simple. The accrual method, on the other hand, it's a little different. It doesn't necessarily follow the cash directly. What happens is in an accrual method, when you make a sale or when you generate a sale, and let's say you generate a sale, but payment isn't made for that sale until a little later. In the accrual method, you recognize that sale the moment that sale has been complete, not necessarily when you receive the payment. So typical example is, invoicing. If your payment terms are such that you render a service, you invoice the client and they have 30 days to pay the invoice. Well, in the accrual method, you would be logging in that sale or logging in that revenue to the account once you've completed that service, once you've rendered that service. You'll recognize that at that moment in time, and then you'll get the cash later. In the cash method, you won't recognize that transaction until you actually receive the cash. So there could be a potential 30-day difference between the two methods, and this really can impact your financials if we're talking about within that 30 days there's been a change in year. Maybe you sent out this invoice in December but you didn't actually receive the payment in January. Well, that affects, depending on the cash method or accrual method, that affects your financials for each year. So that's kind of the simplest way I can explain it. Like I said, most small businesses will go with the cash method because that's just the easiest way to track, your revenue and expenses. But certainly the accrual method is a viable option as well. And I don't know, Luis, if you want to add anything onto that.
Yeah, Oren, I think you explained it perfectly well, right? I think the only thing that I would add to it as well, even from like a tax and even from like an access to capital perspective as well, most lenders, well, I would say all lenders prefer that you work in an accrual method to begin with, right? Reason for that is kind of like what Oren was mentioning as well, is that with the cash method, while yes, it is very simple, it does leave spaces where things can get a little gray, right? Or where things will not be tracked just as well, right? So let's say under the cash method, let's say that you are proposing to buy a work vehicle for your business, right? And let's say that you make some sort of deal where the owner of that vehicle will say, hey, I'll sell it to you, but you can give me the cash 30 days from now, right? Don't worry about it, right? Like you're good. So under the cash method, and let's say that you apply for a loan or you're filing your taxes and stuff like that, right? it would show that you still have this substantial amount of money in your bank account, right, to pay for the work truck because it hasn't left yet, right? However, what the other person that's reviewing those files, your accountant, your banker, or the IRS in this case as well, they don't know that you purchased a vehicle, right? Because there's no way to track that, right? Yes, you have a vehicle that magically appeared, but the money hasn't left, so it's harder to track. So that's why with the accrual method, it's preferred if you have that system, or if you can shift to that system at some point in time, just because under the accrual method, as soon as you agree to purchase that vehicle, it'll get marked in your books, right? Even if the cash hasn't left yet, there is a transaction that happened, right? And it's a lot easier to track everything. So it's a little bit clearer.
Our next question that was selected by the poll is, how does being self-employed impact my taxes? Luis, do you want to kick us off?
Yeah, honestly, I think with this really just leads us into like the whole self-employed versus having employees conversation, right? This could easily be like another hour as far as like a conversation, right? But really the big thing as a self-employed individual, just know that depending on the work that you're doing, you as a self-employed individual are responsible for paying like all of the taxes regarding like you being self-employed, right? In this case being 15.3%, if I'm not mistaken, right? So yes, you are a small business owner. Yes, you are paying these taxes as well. If you're self-employed, that's kind of like the burden that you have to like deal with, right? Which it kind of sucks, right? But as a small business owner, you will eventually get to a point where you potentially start hiring individuals as well, right? And you have to make this big decision whether you hire contractors or you hire individuals or you hire W-2 employees, right? On a part-time or on a full-time basis, right? And a lot of individuals will struggle with this question. And honestly, a lot of people will default to using contractors, right? And this could lead to a myriad of issues, whether it's like misclassification, right? Having individuals that should be employees that aren't employees as well, right? But yeah, I'm digressing just because this is like such a huge topic as well. But honestly, as a self-employed individual, there's only a couple of things that you really have to worry about, right? One, make sure that you file the schedules on your personal tax returns, right? Usually if you're self-employed, you're under a sole proprietorship type of agreement, partnership type of agreement, or even a very very simplistic LLC, right? Because I see a lot of individuals that'll do that work as well, right? But honestly, as a self individual, as long as you're filing your Schedule C, reporting kind of like your freelancing income as well, right? And paying the adequate taxes to it, it's nothing too crazy. But yeah, I think the big thing here is primarily the big question that as an employer you will have whether to choose whether you hire someone that's a contractor or an actual employee, right? And Oren, I don't know if you have anything else to add to this conversation, just because you can go into like a big hole into this one. Easily.
Totally. And I have gone into that hole many times. I've done a lot of work with labor agencies and gotten to know this a lot better. But basically, I guess the biggest takeaway here is for those of you that are thinking about, bringing on a workforce and you're kind of going back and forth between employee versus independent contractor, just be mindful that the legal business landscape is in transition. And it's now we're getting into a place now where you can't simply just bring on someone, call them an independent contractor, and then treat them like an employee. That's kind of where this misclassification comes in that Luis is talking about. For those of you in California, especially, you may have heard of AB 5 that I think was put into law, I think 2019, I want to say. And that basically is a law specifically preventing misclassifications of employees as independent contractors, and giving those quote unquote independent contractors entitlements and rights that they would have otherwise received if they were employees. So moral of the story is don't misclassify. If you want if you want to bring on independent contractors, make sure that you develop a scope of work and a relationship with them that follows what would be considered an independent contractor as opposed to an employee. And this is going to be things like, you can't have oversight, you can't have managerial oversight over them, you can't withhold their taxes, you can't have them on a strict schedule or a shift schedule. Generally independent contractors, they dictate their own payment terms and their own schedule. They're essentially their own business. That's how you have to look at an independent contractor, is you're just hiring them as a professional service, as if you were going to hire like a marketing agency or an accounting agency. Independent contractors need to be treated as such. So that's the biggest thing that I just want to make sure that, those of you that are planning on bringing on a workforce understand, and kind of how the business landscape is changing in that regard.
And our next poll question that was by far the highest one that people wanted to hear about is, how do I deduct my business expenses? I feel this because, we gotta love a little deduction. If you gotta do taxes, I want to hear about the deduction. So maybe Luis will kick it to you first.
So honestly, you'd be surprised at the things that you can deduct as a small business expense, right? But really, you have to follow two different rules. One, that expense has to be ordinary, right? So it has to be common and accepted in the field of business that you're in. And then two, it has to be necessary. So it has to show that it is useful for you to make this expense in order for you to grow your business, right? So oftentimes I'll get the question and say like, hey, Luis, can I deduct this expense on my taxes? And like we have to like really just start thinking, like, does it make sense? Is it ordinary and is it necessary, right? Because I know some business owners that'll deduct trips to Vegas to attend conventions and stuff like that, right? And it makes sense because in the line of business that they're in, and their financials showed it and demonstrated that they made a lot of money and a lot of sales whenever they would attend this, right? So it has to make sense, and it has to be an expense that makes sense in your industry, right? Like if you operate a small retail store in, let's say, San Diego, right? And you say, hey, Luis, I took a trip to Vegas because I'm selling my product there, right? But if you don't have the capacity to ship product or selling things to like another state or like in another like economy market, whatever that may be, then that wouldn't be an ordinary expense for you, right? Just because other similar businesses aren't doing that. So really the rule of thumb here is just making sure is any expense that you make or that you're taking, are your other peers that are in similar industries doing that? And does it make sense? Is it yielding results? Is it making you profit? Is it growing your brand? And there's different ways to like define necessary, right? But it just has to make sense, right? Because you'd be surprised if I've met some business owners that make some really questionable decisions as it pertains to this, right? And some have gotten away with it, but others have gotten the IRS to knock on their door and say like, hey, I don't think this is right. So we need to like review your taxes, right? And then they get audited. And then as soon as the IRS finds out that you made one mistake with your deductions, they'll say, uh-oh, you made a mistake here in your deductions. I wonder how many years you've been doing this, right? So then they'll say like, let's look at your past 5 years, let's look at your past 3 years, whatever it may be. And I've known small business owners that'll, as soon as they got audited because of their deductions, all of a sudden they got several years of like audits, and all of a sudden they have like, I had one person I was working with in California that owed the IRS after a little boo-boo like this, like about $70,000-$80,000. So be very careful, right? But yeah, and I guess for like the next section, Oren, I'll send it your way.
Yeah, I think Luis covered everything here. I guess the only kind of add-on I have there is just, kind of going back to how you are reporting your business revenue and expenses matter here, because, essentially you get taxed on your net earnings or your profits, right? So, whatever your revenue minus your expenses are, whatever's left over is what you're getting taxed on in most cases. And that doesn't necessarily apply to excise taxes. Again, you have to kind of research your local excise taxes for that. But generally speaking, you're going to get taxed on your net earnings, not necessarily your revenue. So that really helps to kind of navigate how you're going to strategize what you want your profit and loss, which is what we're talking about here, your profit and loss, how you want that to look like, and how you want to kind of apply this magic that Luis was talking about. Because obviously the lower your net earnings, the lower tax liability you're going to have, but that again may kind of negatively impact you in the future if you're looking for like a loan or something like that. So it's just important you think that through. What your short-term goals are and what your long-term goals are with your business.
Okay, well, thank you all for taking that poll. And just as a little flag at the end, there will be a quick survey. We would love to hear if you enjoyed this more interactive experience, and just kind of customizing the answers to your business. And then once again, if your question didn't get selected, please don't worry. Like I said, the full deck will be coming your way with all of those slides. And I also have a really exclusive opportunity for all of you today. So we totally understand, especially when it comes to topics like this, like taxes and whatnot, sometimes you really need kind of that more personalized experience where you can ask your question directly. And Luis and Oren are going to be holding a small group coaching opportunity. I just dropped the link in the chat. So this is a limited spots only opportunity where you'll be in a room. It'll be a meeting, so we'll be able to, see everyone, and you will be able to interact and ask your questions live. So we're going to go through as many questions as we can right now, but if that sounds like that's something that's interesting to you or you want to dive a little deeper, please check out this meeting registration. And if you're on your phone or something and can't click it now, don't worry, it will be emailed to you tomorrow, but there are limited spots. So just wanted to mention that before we jump into the Q&A, which Luis and Oren, it is popping off, lots of questions in the Q&A. So we'll go ahead and get started. So we have a question here that's from Natalie, and she says, which tax filing would you recommend if you use the pass-through option? Would you pay a higher rate of taxes than if you filed separately for your business? I forgot to mention that area, but Luis, why don't we kick it to you first?
Yeah, honestly, I think there's like a lot of complexities to this for sure, right? What I would advise in this situation, talk to a local CPA or a tax professional first, because there will be implications on a federal and also on a state level as well. So you want to be very careful, right? But typically what a lot of individuals are doing, especially for a new business, right? I usually always advise individuals to start with like a simpler kind of like entity type first, right? Usually there's no reason to start with like a C corporation or an S corporation. There's a lot of complexity and a lot of stuff that you have to organize with that kind of a structure, right? And especially as an S corp, it's very popular with like tech companies, right? So unless you're a tech company, I would say like, yeah, that's a great option for you, right? But if you're like a more traditional business, retail, small business, like that kind of thing, like honestly, a sole member LLC would be more than enough to get started, right? To be honest with you. Yes, the tax implications would be different from like a sole member LLC compared to like, let's say like a C corporation, right? However, it's one of these things that it's a lot easier to manage. You're going to save a lot of like headache and definitely like costs, as well as you have to work with a CPA to do a lot of different filings under different types of like corporate structures. So usually it's an entity that a lot of individuals eventually evolve into if they get to like a certain scale, right? But as I mentioned, there's a lot of like nuances behind it as well, depending on the number of employees that you have, where you're located, right? The type of like the amount of like money that you're making, right? And how many owners there are. So I'd say, at least for this case as well, depending on where you're at, talk to a CPA. They'll at least be able to advise you better, right? But because there's a lot of variables that go into it. And Oren, I don't know if you have anything else to add to that.
No, I just want to kind of make clear, this is definitely more of a question for a CPA, because they're able to kind of look at your look at your business, they can look at what your preferences are, and like they can look at your tax situation, and they can advise accordingly. We're not, equipped to do that necessarily. We can essentially just tell you kind of how this all plays out. But going back to Luis's point about kind of starting simple, I mean, I would agree with that. I mean, you start with getting a business license. Everyone that wants to do business has to get a business license. And once you get your business license, you're essentially by default a sole proprietor until you do what's called filing articles of incorporation to create this separate legal entity, separate from yourself as your own legal entity. We are all legal entities. We have social security numbers. When you create an LLC or you create a C Corp or an S Corp, you're essentially birthing a new legal entity with its own tax number, which in that case is an EIN or a federal employer identification number. And that's when things get a little bit more, complicated when it comes to tax implications. So I would say just think about what your needs are as a business. Think about how you want to grow and scale the business over time. And maybe that'll help provide a little bit of direction in terms of, how you want to structure your business now and maybe even later.
Yeah, and I think just to add as well, there's like so many with the extra complexity, like I'm sure Oren, you can say like you filed K1s, that's not fun.
Yeah, no, my business was an S Corp actually, and essentially an S Corp, essentially it's a pass through in its own right, just because you're removing the corporate tax rate that a C corporation has. So essentially this kind of becomes pass through. But yeah, I know there's a lot to it. I mean, I consider myself relatively experienced with taxes, but I would still hire a CPA just to deal with all that stuff because it's a bit of a headache.
I feel like the tagline for taxes is just not fun, but so I'm going back and forth between the chat and the Q&A because I've seen questions in both, which is totally fine. But one of Tiffany says, what are the most essential documents to bring to your tax preparer? Oren, I'll kick it to you. I'm trying to alternate, but I'm forgetting.
Yeah, I mean, again, it depends on your business. It depends on your legal structure, but generally speaking, if you can provide your tax accountant with, 3 of the primary financial statements, and that is your profit and loss statement, your cash flow statement, and your balance sheet. If you are able to, get those updated and accurate upon submitting to your CPA, essentially that's kind of everything you need. Maybe depending on additional tax requirements you may have based on your industry, maybe I'm sure there's more to it with construction or food services, but generally speaking, if you can get your tax provider those 3 statements, that's essentially most of what they need to get everything to do everything that they need to do to finish your taxes. So that's the profit and loss, the balance sheet, and the cash flow statement.
Yeah, no, exactly what Oren said. Nothing else to add. I would just say the easiest thing to do is, especially if you're using technology, like I have so many clients that will, depending on the accounting system that they're using, they'll say like, I'm just going to give my accountant like my login, or like I'll make a way for them to access that account, and it's done. It's done, right? So I guess it's harder to do that if you haven't started on that, right? But leverage technology because it makes it a lot easier too.
Options out there, which I know we had someone ask about, and Luis, I believe you answered that in the chat, so keep an eye out for that. One question we had is, if we're self-employed, but in the beginning stages of our business, and then we chose not to pay ourselves by paying all the money back into our business, so putting all the money back to our business, does that heavily impact how we pay taxes? Luis, I will kick that to you.
Oh, I see. Let me just read the question again. I have to process it, right?
Yes.
Not pay ourselves by paying all the money back into our business, that heavily impact how we pay taxes. It would actually, yeah. So essentially what you're doing as a new business owner is so how your business will be taxed, right? As a pass-through entity as well, or a self-employed individual in this case, right? is you're essentially being taxed on all of your like profits for the actual business, right? As I mentioned earlier, I would recommend that you also work with a tax professional for this as well, because there's different ways to do this, right? But typically you could make it in a way where you would reinvest that money into the actual business as well, right? To continue to buy assets, different things, right? And that would essentially reduce kind of like your business or your business tax liabilities, right? It is possible as well. Usually what a lot of individuals will do in your situation is that they'll use that profit, and that's how they make their own income, right? That's how they get taxed on that. But yeah, at least what I would say to this as well, definitely talk to a tax professional, because there's different ways to do this, and also depending on the state that you're in, there might be some like slight differences as well. Oren, I don't know if you have anything else to add to that one.
Yeah, I mean, I want to know a little bit more, get a little more context around this particular situation. But yeah, generally speaking, you know, the less you as the owners of the business are taking as personal income, and also the less that your business is generating profit, especially during the startup phase where you're pretty much, you know, reinvesting everything back in, you know, the lower your tax liability is going to be. But again, it like I answered with all the other questions, it just depends on your business structure, it depends on where you're at, it depends on your preferences. So I'd want a little bit more context to be able to answer that question a little bit more comprehensively.
Yes, absolutely, which goes right back into my plug for the exclusive group coaching opportunity, because this would be a perfect opportunity to really be able to talk through some of those additional details that are really key in, especially when we're talking about taxes, which is an extremely personalized experience, you know, for your business. So I see so many great questions in the chat. I promise to not only drop a lot of resources, including this webinar, but when you get your follow-up email tomorrow, you will get the deck that will go through all of those poll questions and answers to all of those. You'll get the recording. You'll get some really key informational articles that we put together that directly relate to this. And you'll also receive two really important links. One, the group coaching link that I've dropped in the chat, and also the one-on-one coaching link. So if your schedule doesn't allow you to join that, or you need just a more one-on-one experience, please check out one of those coaching links so we can support you in your journey. We are basically at the top of the hour. I know taxes is it's a heavy topic. There's so much we could go into. And we are super, super thankful to our partners at Found LA. I'm very grateful to Luis and Oren for being here today and answering questions. And please keep an eye out for your email, because we will continue to be here to support you and your business through this tax season and many, many more to come. Thank you all for joining us, and we will see you next time.